Hello everybody. So we are going to look at how to do a cost of goods manufactured in an income statement for a manufacturing company. And what I've done is I've kind of set up a generic thing here where I have information for January 1st at the beginning of the year. I have information on December 31st for the end of the year, and all my information that happened throughout the year. Now, in order for on a manufacturing company, we do a statement of cost of goods manufactured, and then when we do our income statement, we transfer our cost of goods manufactured number over to our income statement so then we can complete that. So let's go through this statement. This is going to give you a good idea of what areas and what to look for. So our first thing that we do is we look at work in process January 1st, and I have in here my information on January 1st at the beginning. I have the $753,000. Okay, that is going to be your beginning work in process. So then what we need to do is we need to look at our manufacturing cost. Now manufacturing, remember that it consists of direct material, direct labor, and factory overhead. So we start with our direct material. Now we have to know what our beginning inventory is on January 1st. So that is $435,800. Now, throughout the year, we actually purchase material. Without purchasing material, we can't make our product. Okay, so our direct material that we purchase for the year is $759,800. So what that does is that gives us our direct material available. Okay, so throughout the year, at the beginning, January 1st, we had $435,800 of direct material available. We purchased additional $759,800, so we actually had $1,195,600. So now our ending inventory as of December 31st, remember this is our direct material, is the $436,800. So we actually use $758,800 of direct material. Now we can do our direct labor. So remember, direct labor is what is directly allocated to making that product. So our direct labor for the year was $690,800. Now the next category is your factory overhead. Factory overhead consists of items that are either insignificant to the product, say like glue, you put in staples. Well, you don't have to put exactly 10 staples in, so that's going to be indirect. We also, on our factory overhead, we want to make sure that we put expenses that are directly related to the factory. That's why it's called factory overhead. Okay, so let's start down. We have our indirect factory labor. That is over here, $98,750. Depreciation factory equipment. Okay, over here you notice that I have two depreciations. I have depreciation for factory, I have depreciation for office. I'm only going to put in the depreciation for the factory equipment. We have factory utilities. So that one is $42,460. We have a miscellaneous cost for factory. Okay, you guys kind of getting my idea of what we're putting in here? Again, property tax on factory. I pay property tax on my office building. I also pay property tax on my factory. I'm only in factory overhead going to include the property tax on factory. Oops, let's actually get the dollar amount and not the wording. Okay, rent expense, factory. Okay, so that's going to be $62,000, and any supplies that are factory, that's $27,000. Now there's several of these that I did not use. those are going to be transferred to the income statement. So what we had for our factory overhead, we had $344,370 in total manufacturing cost. Okay. Now our total manufacturing cost are the $750,880, the $690,800, and the $344,370. This gives us our total manufacturing cost. Okay, our total cost of work in process during the year was our beginning work in process from January 1st to our total manufacturing cost for the whole year. Remember, this is at December 31st, so this is everything that happened for the entire year. Now we need to add one more item on this statement of cost of goods manufactured. We have to do the less work in process December 31st. Work in process, in our reading, that means it's work that is not completed. We cannot put it into finished goods. We can't sell it. It is not complete. Okay, so our work in process as of December 31st is that $592,800, where it says information on December 31st. Okay, so our cost of goods manufactured is $1,954,170. Now let's actually go into our income statement. Remember, your income statement is your sales minus your expenses, which gives you your net income. This is the same income statement that you have been dealing with from financial accounting. Now we're doing it in managerial accounting. Okay, so our sales for the year, I have our sales revenue of $4,010,000. So now we're going to do our cost of goods sold. So we have our finished goods inventory January 1st. Over here I started with work in process January 1st. Now I need to know, what was my finished goods January 1st? Well, that was $748,500. That number that I just calculated on the statement of cost of goods manufactured right here, it's your next line in the cost of goods sold section of $1,954,170. This gives me a cost of finished goods available for sale. When it's available for sale, we can sell it to our distributors, to our wholesalers. If we are a retail company, it's ready to go out the door. Okay, now we need to figure out what was left of our finished goods inventory. Okay, so we had $576,000 worth of finished goods as of December 31st. This gives us our cost of goods sold. The difference between your sales and your cost of goods sold, you have $1,883,330 worth of gross profit. Now we need to take out our operating expenses. We are not going to worry about income tax on this problem, okay? But do understand that on income statement you do have some, if you make money, you have to pay to the government. Okay, so what we're going to start with our operating. Now we're going to get those things that did not say factory into the income statement. So let's find what we have here that we have not used. We have office salaries expense. For administration, we got to pay our people to do the accounting work, right? So that was $285,000. We have depreciation. Remember when I showed you when we did the cost of goods manufactured, you had a depreciation for factory. You also had a depreciation for office equipment. This is where the depreciation for the office equipment goes. So that was $52,120. Remember, we had two property taxes over here. We had property tax for office and property tax on factory. This is where the property tax on the actual building, not related to factory, goes in this area. So that's 52,400. So our administrative expenses total 389,520. So then we have our selling expenses. Okay, so that one we have advertising. We got to advertise in order to sell our product, otherwise it's not going to work. So advertising costs us 396,400. We've got to pay our salesmen. Salesmen go out and they sell our products. They tell why people need to buy it. So the sales salaries expense is 578,000. So our selling expenses total $974,400. Our total operating expenses was $1,363,920. So to get our net income for the year, you take your gross profit, your $1,883,330, minus your total operating expenses. This should be very, very familiar. We covered this in financial accounting, to equal $519,410 for your income statement. Now there's other concepts in this unit, but this is probably the more complex area. If you have any questions, feel free to let me know. Thank you.